Gold last week traded with a modest bullish bias. It scaled to the highs at 1948, and at the same time on the downside the support levels are very clear at around 1914-16. Yes, these levels we discussed in our weekly review last week, that 40-50 zone on the upside and 19-14-15 levels on the downside are going to be a critical levels here. So now what to expect from gold? Is it going to continue on the upside from here, or we can see a drop here again with the sharp red candle? Which position you should take in order to profit, we will see with the help of charts followed with indicators. Towards the end, I will give you the summary of the observation along with the trading strategy and the critical trading levels and entry prices. Watch till the end. Do like, share, subscribe, and comment. Your every like, share, and comment is a great support, inspiration, motivation for me to deliver twice a day analysis on gold every day. And to get the live updates, you should join or press the bell icon or join my free Telegram channel to get the live updates. The link is mentioned in the channel and video description. Let's start. Now see, these are the weekly charts for gold here. You can find out higher lows, higher highs here. And this also suggests this two greener candle or retracement candles are coming after one red candle here. Thus, if you see gold staying below 1914-15 next week, you can expect similar size of move, which is almost $20. So $20 from current levels might take it towards 1900. And thus next week, if gold drops below 1914 levels, you should stay short, and one can expect that it is going to at least achieve 1900 levels. And in fact, the candle can be bigger than this, which might take it below 1900 as well, towards 1885 or 1870 levels. So again, the level for next week on the downside is going to be 1914-15, which is going to be a great support. Now see, why can we treat this as retracement candles? You can see here, see body here and here. The body size has got diminished. This suggests that the bulls are not willing to stay on the upside. At the same time, on the upside also, one should keep a note that here you can find 3 to 4 candles getting a pullback precisely from the same levels, 48, 46.5, 48. And this could be possible resistance zone here, which we should be careful of. 1940, definitely a greater resistance, and then 1950-53 zone. So yes, these levels something which you should watch out for. If gold opens on the upside, tries to scale on the upside, yes, this should be treated as bullish. Once it stays above 40, certainly more bullish momentum can prevail, and then we can look forward to, in fact, 1960 and 80 levels as well. The second point to observe here is, see the flat top, and since then lower highs, lower lows, it is trying to create a bearish channel. The bottom of this channel should be at around 1870, 1860 levels if it continues its movement on the downside. Hence, next week is going to be critical where one has to remain watchful. Now, see also another point to note, look at the pole here, look at the flag here. Gold is still trading and creating this flag here. Also note this point that this time it is reversing from not achieving the bottom of the channel here, and it is reversed. So this is something which is suggestive that sooner or later gold might give a breakout on the upside. But I will come to the other time frame charts and suggest you why it will take a little more time here. Right now it is trying to consolidate here in zone. I will be definitely watchful on 1900 on the downside. Below that, certainly more bearish momentum may follow. Now this is on the weekly charts. Let's have a look at the daily. Now on the daily chart, see double bottom levels here, rise, then the retracement, rise. Now see, this time if it would have breached past the highs of previous rise here, then certainly we could have said that yes, it is willing to give a breakout, and this time we can see it achieving the highs of this channel. Right now what it has done, rise, retracement, rise, and immediately followed with a retracement. At the same time, one must note here that on the daily charts, see the last candle, despite couple of retracement candles, the last candle was a greener candle. Prices stayed on the upside from here, did not want to break, and that is what we had seen, that potentially from here we can see a little rise or retracement, as this is still bullish here. So on the first trading session, on the first trading day, if you see gold staying below 1920, yes, we can initiate a sell entry, however with a caution for 1914 1916 zone, and if it stays below 1914-16, you can say that it is a breakout and we can see a sharper drop there. So this is on the daily charts. At the same time, one must not forget couple of retracement, one green candle, let it stay above 1930-32 zone, and then potentially it is going to rise. I will wait for the highs to be breached here, as the highs of this channel is now at around 1960 zone. So if it continues its upward move, breaks past 1950, next target is going to be 1962, 1963 zone, and beyond that, more bullish momentum is going to prevail. So right now, broadly, gold is trading in this channel here. This is a broadly bullish channel here. At the same time, a break on the downside below 1910, 1900 is going to be critical, because largely you can see in the long run it is still staying or creating lower highs and lower lows. So a breakout consideration in the near term is only above 1985 levels, above which we can say that the gold has turned bullish and it is reversed completely. As long as 1985 is respected, we should not be treating this as a reversal, because there is a channel in which it is trying to play and it has to break beyond this channel. So certainly 1985 is the level beyond which we can say that it is trying to breach. Also on the daily charts, one must note that it is still trying to trade sideways. A breakout above and below is going to be critical. At the same time, let me show you something more on the little far term. See, this was the rise here, and also one must note that this rise is coming on the backdrop of a triple strong bottom, rally, retracement, rise, and this is again a retracement. And if you look at this formation, you will find, see, after the drop, it is stabilized here certainly, and it is trying to form a cusp here, possibly beyond this. There should be a reversal which is waiting, else a breakdown on the downside below 1870 levels can certainly bring the prices little down. However, one must note that this is the zone at around 1800 levels, 1820, 1800, which I expect gold not to break past by any point of time in the near future. If it does, then you can say that the crash is waiting. But so far, it appears that it may not try to break past by, as it is trying to stabilize here. Now, let's also have a look at the similar observation on the monthly chart. Sideways movement, rise, sideways movement here. It is staying in the box. A triple top is done here. Then you can see price is staying in the box here between 1600 to 2100 or 2070, 2080 zone. But at the same time, this is a broader zone. Also, one must note on the monthly charts that it was trading with this flag formation. It has seen the rise, it has seen the breakout. Also, another point to note, now see, first at 1600, then the base at 1800, and now it is trying to create the base somewhere here at 1900. At the same time, see, after the rise, this is a retracement and consolidation going on. And see, if you look at the pullback here, this was a strong pullback from the top, and this is coming after a strong rise. So after the rise, consolidation going on here, and I will definitely observe how it behaves at around 18. If it continues on the downside, 1850, 18, or rather I will say 1840, 1870 zone is going to remain critical for gold here. Now see, this candle is red. Right now it is yielding higher lows, lower highs. The month is still due for 5 trading sessions, and hence we will definitely watch out how far it can stretch the top. Any drop below 1900 can pull the prices with a strong gravitational move on the downside towards 1870, 1860 levels. But let's have a look with the help of indicators. What does the indicators are? Indicators on the monthly charts, you can see the 20, 50, 100 exponential moving average, trading parallel, trading with divergence. And yes, the prices are looking to achieve the levels here. You can also keep a note that this price is somewhere here at 1870. And on the weekly charts also, there is a gap level. 1870-60 is certainly going to be a great support if gold continues its downward move. Stochastic has dropped. MACD, now look at MACD. MACD is still in green. It has converged, but it has not yet crossed over. Also, if you look at MACD, see, this is how MACD is trading here. So right now, a breakdown in gold prices on the downside. Yes, there is a possibility that it was trading with extreme divergence. The candle size has peaked, it has converged, and if it starts to diverge, it is going to bring a very, very strong bullish momentum in the coming months. Also, you must note that, see, this crossover is coming after almost 2 to 3 years. This was the first bullish cross, then the retracement, then second bullish cross, and it is at a slightly higher level, suggests that it's still the momentum is there in the coming few months. RSI almost flat. Coming to the now see here, moving averages are trading with divergence, convergence, divergence, convergence. Now prices have taken the support from the 20 and 50 weeks average, and it is trying to stabilize at around this zone. The 50 weeks average now sitting at around 1900, and the 100 weeks average is around 1860 level. So yes, these are going to be good support and resistances as well, which silver gold is trying to trade within, and hence one has to be watchful, cautious and alert between this zone. Stochastic here has retest on the weekly and trying to look down. Let's watch more. Now see MACD is still bearish here. It has stretched the drop here. You can see rise, retracement, and at this point see it has seen extreme divergence. Possibility of a conversion also exists, and that is why greener candles are seen here for last couple of weeks, though the body size is small, but it has also bought the conversion here, because see candles were trading with extreme divergence, and hence any crossover here should certainly bring the momentum, but right now it is still staying bearish. RSI is comfortable here. Coming to the on the daily charts as well, see 20, 50, 100 period moving averages are bearish. See both, you can see all the three moving averages are trading one over other, suggestive that still the prices are not willing to converge and the bullishness is not there. And we can see right now the swings across these moving averages itself suggests that right now is staying parallel. A convergence crossover will bring more bullish momentum. I'll definitely wait for a crossover here on either which ways. Stochastic looking downwards, trying to stay bearish. Now look at MACD. It is in green and it is almost staying near to zero line. RSI is almost staying flat. So now we have seen the charts, we have seen the indicators. Time for me to summarize the observation and give you the trading strategy and levels for next week. But before I proceed, if you want to learn this art of trading, you should join my mentorship batch. The 26th batch is going to start on 9th of October. Only limited seats are available. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Remember, the seats are allocated purely on the first come first serve basis and hence reserved immediately. At the same time, you can be part of my signals group as well. So contact me for more details. Now, to summarize the observations, see gold is at critical junction as of now. Couple of retracement candles are seen on the weekly charts, but at the same time, we can see the bullishness getting diminished, and hence the coming week one has to remain watchful, cautious. A break below 1914.15 and 1900 zone is going to bring more bearish out there, and the prices may see a fall. If it stays below 1900, certainly the bearish momentum will increase. So you need to keep a watch on these levels. And on the upside, yes, 1930 32 levels is the first resistance zone. Beyond that, we all know 1940 and 50 zone is going to play a pivotal role here, because if it stays above 1940-53 levels, the next target is going to be 60 to 63 levels, and beyond this the next milestone is directly towards 85-84 levels. So yes, these are the key observations and key critical levels. On the downside, below 1885 it is 1870-60 zone, which is a great support. So with that, now let me give you the trading levels, strategy and profit ideas for next week. First, let's talk about the levels. Yes, you can initiate a buying entry at 1932. If it stays above 1932, we can look forward to 1940 levels. We are looking forward to 1939.5, and then beyond this we are looking forward to 1946.5. If this time gold stays above 1946.5, further bullish momentum will take it towards 1953 first target, and beyond 1953 we are looking forward to 1963, and after this directly it will try to move towards 1983 levels. Plus minus 10-20 pips you can keep a check on, but these are going to be great resistance level. Beyond this is sky is the limit on the upside. Remember, beyond this sky is the limit on the up. So yes, first is this, then this, and then 1963-83 levels are going to remain critical for gold in the coming week. On the downside, where to sell? Yes, you can sell here at 19 20 levels, 19, 20, 18. You can choose some point here. If it stays below these levels, more bearishness may prevail, and then 19, 14. Once it stays below this, even I will say here 19, 14, 19, 12. I will just let me write down the levels or zone. Below this, it may try to attempt and achieve 1900 level this time, and below 1900 is where more bearishness may prevail. First at around 1889, then 1882, and then below this it is going to hit 1870, 1860 zone. This is the maximum support zone on the downside, breaking below which the bears will be all over, and then one can look forward to 1840, and I do not see it breaking below these levels any point of time soon, and hence I am limiting myself to 1840 levels. So take your positions accordingly. Trade with a stop loss, trade with a trailing stop loss. Do like, share, subscribe, and comment. Join my mentorship batch or signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. My free Telegram channel ID is also linked in the description. Do join the channel, do press the bell icon, and do like, comment, and share. Thank you very much. Have a great profitable trading week ahead. Thank you.